reject here and plummet below 5100. Don't say things like that. Ooh, it's getting really close. I hope it actually doesn't fail, because otherwise I have to sell a call. It's okay. Look, the bulls are aggressively attacking the dip on the at the money call. Tesla commentary? What do you want on it? I said it's got to break above 183 to run. It did for like a hot second this morning, and then it failed. So it still needs to break above that to run. And it's not necessarily dead, it just has to get above 183. If it gets above 183, it can run. Why do you think they're keeping GOEV pinned to 280? Because they're big and they're trying to net off as many of their fails as they feasibly can before they have to cover anything. It's been on Reg Show for like, what, 30 days now? It's getting ridiculous. And it wasn't on Reg Show when it ran, right? It was put on Reg Show in an effort to stop the run after the reverse split. So it's not like Beyond, where it was on Reg Show and it ran during earnings and it got a bunch of liquidity. It ran, and then in order to stop it running, they pushed it onto Reg Show. What's your biggest meme position? Right now? Upstart and Beyond are both pretty decently sized. I got about like 6 and 8 grand in them. Oh, whatever I have over here, like another 1,000. So 9 and 6 grand. Which situation of Reg Show inclusion is better, GOEV or Beyond? I mean, Beyond is good because it got shorted down so hard again that they pushed it back onto Reg Show, right? So that's nice because you can see all the synthetic short build up, and then that creates the failures that spill over and the high fail to volume ratio that drives Reg Show inclusion, right? And so it's like really easy. It's mechanically kind of obvious. GOEV is a lot trickier because GOEV is on Reg Show due to the reverse split. And so this is what I think happened with GOEV, is that prior to the split, shorts, the short position, were synthetically short some number of shares greater than the float. So in a split, what should happen, right, is that everything should be equal, right? There shouldn't be any issue from pre-split to post-split as far as shorts are concerned. Unless you are short some number of synthetic shares in excess of the float, right? Because say you're short 3 billion shares, right? But the float is 1.2 billion. And then the float goes to 56.6 million, but your 3 billion shorts go to what is it, 130 million? And now you need to try to resolve your short position that's in excess of the float with a much smaller float. And this could be far more than that. I mean, based off of liquidity, it may be double or triple the total shares in existence. So this might be like 260 or even as high as like 400 or 520. I don't know how much it is, right? And so this is where it gets kind of opaque, but they attempted to cover some of those shorts right after the reverse split. Some of the shorts tried to get out, but there wasn't sufficient liquidity. And so GOEV moved onto Reg Show, where it has now been forced settled for 17 plus days. Now this is slowly bleeding back, over time as it chops sideways. They're slowly bleeding back those shares, except they can't get it off of Reg Show because the covering, and this is why it's still on Reg Show, even though it's, it's been force covering for more than the T+13 initial period, is because the covering in itself is creating fails in excess of the shares covered. So kind of like this, you have one FTD, and to cover it, you create 2 more FTDs. Now, it's probably not at this ratio. That would be extreme. Maybe like 1.5. So you're netting some number of positive fails. And since your netting creates more fails than the fails that are actually covered, you can't get off of Reg Show. So you become trapped. So the trick here is that you sell calls. This is how you do it. You sell calls, shitloads of them. Then, because the DMM can provide liquidity and you don't have to worry about the FTDs anymore, you run the fuck out of the stock and then you exercise all the calls. And this takes your pile of FTDs and it gives them to the MM. The MM provides you with all your shares from your exercise. That's why you get the T+2 run, right? Part of the reason. And then the FTDs are the market maker's problem. And so you've just taken your massive bag of risk and given it to someone else. Now, then the MM goes to the ETFs where it gets liquidity, right? To cover their FTDs, provided there's sufficient liquidity. Maybe it exists, maybe it doesn't. And then they cash settle the FTDs. So you basically you launder all of this liquidity through this loop, and at the end of it, you're clear. No, GME sucks. GME's super, super liquid. There's no liquidity issues. The only runs it gets now is when short vol closes, and then, you know, it fails and falls back down again. The scenario I just painted was true on GME back in 2021 when it went on Reg Show. Girk, perforate your line so SPX can break through. No. SPX has to punch through the solid wall. Otherwise, it's just not worth being long on, right? You have June and Jan 26 for GOEV calls, right? I have May 17 and Jan 2026 calls. Thanks for the great GOEV breakdown. I finally understand something you said. Cool.